All right, I am on. Give me 1 minute. I am going to go on my channel. I have this open, and then what I'm gonna do is pop this open. I did this because it's easy for me to read up here. Hey Manuel, what's up? Thank you for joining. Okay, so I have not been on for a while. Been on a little short break here. How's everybody doing today? Hold on, let me drink some coffee here. Okay, let me wait a few minutes here. I know Manuel's here. Okay. Price action's pretty steep lately. I'm so glad that it didn't go down to single digit. I know Manuel's was waiting. Did you wait for single digit, or did you go in at $10? This is why I never wanted to wait, because that dollar cost average down is the best strategy for long-term investors, right? And so again, this is the nature of markets, right? It goes up, it goes down. It, some people are just overzealous at how predicting the price of GME due to news base, revenues down. Remember when we were down here, the miss, right? Quote unquote missed, expectation is low, and then they just smack the price down even though we're profitable for the first time, right? So this is the overreaction that happens in the market. But what happened when you're down here? People keep kicking you down, right? There's a lot of people making video how Gamestop is a shitty company. You're never gonna see it back to wherever, right? Whatever price that they're have in their head. And I knew that this is bullshit, right? And it happens all the time, and not just GameStop, of course, Bitcoin and all that stuff. Any asset that they're trying to mislead you not to own because it's valuable in some way, right? Again, like, it depends on who you are. If you think that this company is valuable, of course you're gonna buy more at $10. And actually oh, hi Jay, what's up? My God. What happened? What's going on? My God. What's happening to God? Thank you for joining. Yeah, the price action, I know I haven't been kind of keeping up with the video. Of course, I was monitoring the price every day. I was just busy doing something, kind of live my life. But I'm back. This is the weekend, free weekend that I have. So I just thought, hey, let's talk about it. But anyway, so go back to my point about how, this is why it's so important to know the balance sheets, right? To know your company. And imagine if you don't know anything about this company and you buy it at $20, right? And you listen to people, it's like, oh, it's never gonna go back to whatever. You're never gonna see it back to wherever. You're not going to either buy this stock, or worse, you're gonna sell it at the worst time, right? And again, important lesson to learn for everyone investing in anything that you're investing in. I'm just so happen that I'm convicted in this stock, and I love to own the shares of these stocks long term, right? I have my strategy, of course, with the options, with everything. But again, because I understand option and I understand the risk of option, I've said that many of times, and and I developed a strategy that works for me. And so my strategy is to have long-term bag, right? 30 years or more type thing, and then you just accumulate shares for those one. And then you have, if you want to sell covered call, whatever you want to do, or sell cash secure put, that's what I'm doing in my current trading account. And then just, taking advantage of this implied volatility, crazy premium, it'd be crazy not to take advantage of that. It's like the worst case scenario, if I were to sell cash secure put, I get to own the share at a cheaper price at a current, trading price. And so that's the beauty of knowing what to do in that sense. Now, I sold cash secure put, but I don't mind, being assigned, because no matter what, I am going to benefit from that, right? Because I have a long-term portfolio, so that if the price is going crazy, I would be able to capture that run as well. And so it's important to have a strategy if you have one. I'm just developing my own strategy. Whatever works for me is that one, and I understand the nature of this type of run. It could do these things where, this and then, right? And again, this is the volatility phase of the company, the stock price, okay? Of course, the company hasn't done anything, change anything or anything like that. My point is that there's no news, right? Perhaps the Pokemon thing kind of evokes some sort of scares, but I'll talk about that in a minute. Perhaps, short sellers has been scared about this, and maybe they're I don't know. Again, to me, short hasn't closed, right? In my opinion, I'm again seeing the fact that the company hasn't done anything, and then boom, right? Just out of nowhere, volume up or whatever. So perhaps it's an option chain thing, right? We've talked about that. I think, the gamma ram aspect of things. Hold on, you guys. I am kind of rusty. I'm so sorry I haven't been practicing for a little while. I know people are okay, I don't know who you are. Manual equals hello, Jay. Did the solar storm slow the camera? Come on, you guys. Like, hey, I know, like, we have bears and bulls over here. And, of course, Jay has been kind to me. I mean, Manuel, I don't have any problem with you. But, I know you're a bear and all that stuff. And you're trying to taunt people. But, hey. This is the nature of markets, right? You have people who are bullish on this stock. You have people who are bearish on this stock. And this is where the price discovery comes from. And people are going to bet down, bet up, or whatever, based on what their sentiment is. My point is that we're in the bull cycle for this particular company, because we've been bears for a long time. Bears has been winning. And now, if they're smart, they would be, exit at a profit. If you've been shorting this company since wherever, and you think you're wanting to hit a home run, thinking that this company is going to go bankrupt, then I suggest maybe change your thesis a little bit here, because the company is doing way better than 3 years ago. They're not losing money anymore. They're turning profit for the first time last quarter, net profit. And yet people still think, oh, revenue is down. Okay, well, if that's what you think, you might be missing something here, right? I'll talk about that a little bit later, if you want me to do that. But I've been talking about this company for a long time. Moran's Rand has been talking about this company even way before anyone think about how it's being profitable, or like way before it was like popular to talk about it, right? And of course, he's building his platform for that. So if you want to check Moran's Rants, that's the guy if you want to go and kind of educate yourself about this particular company. Okay, let's look at the option chain. Of course, I'm sure people alluded to it already, gamma ram and all that stuff. I don't know. Again, this is just me make an observation based on my knowledge, limited knowledge of option. So currently, last week we have 43,000 contract being in the money, right? Meaning that if these people exercise, now they have to exercise, right? And so, or have the money to exercise. If they do, that means market maker would have to honor that, right? And so if the max pain, where is this, is at $14 and the current price is 17, so they have to make up the difference. So that's what gamma is, right? Gamma ram or whatever. If I'm not doing it correctly. Now, next week, this is the meat and potato right now. If these people are exercising their call, meaning wanting to own hundreds of shares, all of them are exercising it, then the market maker would have to hedge for 11 million shares of GameStop, right? Right? Am I doing this right? I think 100,000 times 100 shares. Yes, 11 million shares. And how have you been trading lately? You know, if you never keep track of GME volume for 3 years, you would see that the volume is like 3 million shares, right? So whenever it hit like tens of million, this is what you're seeing, right? Because there's no liquidity, right? There's no shares for people because people have been buying and holding like crazy, right? In my opinion, based on this particular indication or indicator that I usually track. Again, this is just my opinion, right? Knowing what I know about the indicator and all that stuff, knowing what I know about this company. For been 3 years, we've been kicking down, screaming. People are screaming at you, calling you stupid for buying into a profitable company, a successful turnaround company, right? Well, of course, they would love you to think the otherwise, right? And again, this is the bear case scenario. The scenario that they give you is that this company is not growing fast enough, this company is shit, and all of that BS, right? Again, depends on where you're coming from. You'll be like, it's coming back down to $4. Like, this is not, it's a short-lived. You know, you have people like Tongo Native here, right? He's been making video about how he should have sold at the top, right? Of course, if you know where the top is, go ahead, predict that, buy it. I mean, buy at the low and sell at the high. Good for you, good on you, right? But I'm not in the business of predicting where the price is. All I know is that there's a unique opportunity within this particular company. There's so many layers to this company. Not only that you have a great leadership, right? I'm just talking about the company, not the price action here, okay? Great leadership, great turnaround, story here. And then you have massive amount of people betting against the stock. So those are layers of my bull case, for this particular company. And thereafter too, you've seen a lot of option chain currently coming in, volume. Again, perhaps they can't keep the price down anymore, right? When I say they, I mean whoever is responsible for beating. There's no reason, like here, right here. This particular one, there's no reason for them to bring the price of GME from 15 down to 10. No reason at all except to scare people, right? And so this is why when the price of GME is down here, you've seen a lot of people like these people, right? Now, I don't know if he's been paid or anything. Perhaps it's just his own sentiment here. You've heard of Korax guy, the trench coat guy coming in. I don't know. Again, there's so many people who are trying to beat the stock down or trying to beat the spirit of people who've been bull for this company for a long time, and I've invested in this, so I know what that feels like. But I also know that this is the nature of the market. People are gonna be over exaggerate either way. The bull case, they're gonna tell you it's going to the moon, right? And I think it will, in my opinion, right? I'm just saying. Nah, I don't know where moon is. So wherever the price moon for you, be happy, sell, and then go run with it, right? I have my price target, and my own strategy. And so you need to develop your own strategy too. Now, if your strategy is to only make a couple $100 in this company or in this price range or whatever, then be my guest. Do it. I want to see through this company for a long term, and so that's why I built the portfolio that I have. Now I might be wrong, in the trajectory of this company, but again, I'm always coming back to the fundamental of the company, and this is where I live, right? If the company is doing well, doing things, the right thing, every single time, right? Then there's no reason for me to sell at the moment. If the thesis hasn't played out on my end yet, if the price hasn't catch up to the thesis that I have for this company, then there's no reason for me to sell because of the price action today, right? Of course, now okay, let's see what I'm trying to tell you here. Hold on, let me see. I think I told you this in my last live stream before. My goal is to accumulate as much shares as I can, at a certain price point, right? So my thought is anything under 22, I would just continue to buy at the same rate as I set my, buy orders or whatever every month, right? Of course, I get paid every 2 weeks, but, I buy GameStop in my long term, ever so often. Now, I loaded up so much here. I'm so glad that I did. Around $12, this around here. Around this price range. Of course, I would love to load more up here because I didn't have the fund then. Not much, but I was able to buy a couple shares there. A couple shares. I did load a lot. More than usual down here. And so the new account that I have for my long-term back is around $13 a share. So I'm in the green for that one. The old account that I have, long-term back as well, my cost average is $45, right? For that one, I'm red on that one. But again, I have 30 years for this to play out in my favors, right? And so what I'm planning to do is, for my new account here, I am going to load up, anything under here, load up the same way. Now, if it goes up to 50 something around, again, this is just my own assessment on things, my own strategy. Don't follow it. I would slow down the rate of buying in between here for me, right? Again, because I don't want that price fluctuation and then go into like that and then buy at the top, right? All of that. So I don't want that to happen to me, right? To my dollar cost average up or whatever, right? So, again, this is my long-term and of course my short-term, mid-term trading account. That's when I'm taking advantage of that, price fluctuation, premium collection, and all that stuff, in order to buy more GameStop in the long run, right? As a, more shares, as long as I can, as many as I can before it gets to the S&P 500. So that's my hope, right? Of course, People would love to tell you that this company would never go to that point, would never do something like that. But hey, in my opinion, they can. They can. Okay, so let's address this real quick here. I know I'm ramble on and on. Makes no damn sense whatsoever. GameStop is going to win. Mark my word. Of course, I know that. So it seems like people were selling based on this indicator right here. So I'm sure some people have been taking, profit here. Not, a concerning amount where all of them are selling out because $20, right? I'm sure there are people who are buying a whole bunch of shares here and taking out profit. Traders and the like, right? You've seen a lot of volume coming in, whether it's market maker or whatever. People have been paying attention to this company lately because of the price action. They love this. Traders and the like. Institution, I'm sure they've been loading up on call option too, right? Who knows? This is where the gamma ram, speculation is coming to play. So it's interesting to see whether it's going to be the same exact things happening here. Who knows, right? There's no catalyst here yet as we speak, except for that trading card news right here. Now, for those of you who don't know, they are trying to go into the market of buying and selling rare Pokemon cards. Now, I'm not a card collector, so I don't know. Apparently, it's the value is pretty steep there, right? I would not be paying $500 for any type of card at all. But hey, if you're into this type of thing, there's obviously a market for it. And so we'll see how that goes. It's just another way for them to, increase the revenue. Right? Top line revenue is the pain that we have to go through in this company. And so so long as we are kind of in a downtrend like this, the news gonna have their own opinion on this company. But again, like, this is just one metric that they are kind of beating GameStop on. Of course, that's not, or she should not be just looking at one metric and then running with it, right? You have to look at the overall company, the direction of the company, general managing of the company, the strategy, what the company are doing, And currently, with this Pokemon card trading, buying and selling, perhaps it's going to increase more foot traffic. It's going to substitute for that software decline. That what is it called? The thesis that somehow GameStop doesn't make money. It's going under because of the software, sell. Meaning games, physical game versus digital game. Oh, digital, right? And so again, GameStop could technically, adding, more items to sell, more items to, increase that foot traffic into the store. And so this is a good news. Very good. DVD movie, big news to cover. Oh, okay, DVD movie as well. I didn't see that one. I know about the Pokemon one. It's just, again, this is the incremental steps that the company is actually doing in order to address those issues that, people seems to tell you that it's the biggest thing, right? In my opinion, the biggest thing was overspending. And we already addressed that already. The expenses that we had for the company, operating expenses. This should be the news right here, right? That they've been addressing the operating expenses because we were overstored, right? And those has already been addressed, in my opinion, right? Because otherwise, why would we be, in profit at this current store, at this current environment, right? All of it has been addressed already, but yet they want you to focus on this right here. Again, top line revenue is not everything. You could increase it eventually. What's more important is this net income positive, because we are not overspending on stupid stuff. And on top of that, you have cash on hand. Come on, like the company could survive technically hundreds of years here without going back to shareholder, right? And so whether the company's doing these little things to try to get more customer, what is it, delighting the customer at any cost, not at any cost obviously, the best way we know how to, right? The fact that we're selling more things right now, technically you could sell anything, right? If you could sell Pokemon card, you probably could sell anything as a collectible, items here. And then other trading cards as well. It's not just Pokemons. If you want to do crypto, there you go. What else? What else is valuable here? These are huge. People need to chill, and wait for this company. Revenue are going to increase every quarter from here. Hi, Michael Tucker. Thank you for joining. Collecting cards and Blu-ray, DVD are a natural fit. Great news, revenue streams. Yes. I know the news gonna have they're selling dying items. I was like, come on. I haven't seen any news lately though, because the price going up. People don't want. Okay, so what's happening? Okay, GameStop, OG GameStop, sparkling memories of It's like, of course they're gonna spin it that way. It was just a meme madness 2.0. So again, right? There is no fundamental reason. Of course they want you to think that way. There's no fundamental reason, even though they have been fundamentally improving every single quarter. It's ridiculous. And this is why. This is news based, right? If you don't know what you're investing in, you're going to be at the whims of these people. They're telling you something. They want you to do something. Action based, right? There's no fundamental reason. Really? Who wrote this? Right? Headlines, man, headlines. And people are lazy. People are not going to look into this. They're just going to take this as a face value. And so I'm hoping, that anyone who's listening to this, now I want you to exercise cautions as well. Don't be careful. Don't think that you're just going to buy call option and be a billionaire, okay? Sell everything, buy call option, and then be a billionaire. Be careful on those things too. To me, owning shares is the best way to create wealth over time. And dollar cost averaging down, always, make sure you have your emergency fund. Make sure all of that taken care of before you invest in anything like this. I've followed this company. That's why I'm so convicted. And I'm only focusing on GameStop right now. My portfolio, most of it is in GameStop. Even my trading account right now, all of it is in GameStop. My call options and all that stuff, I closed out for a small profit already. I have not getting back in. Only cash secure put for now, because I saw the implied volatility. That's why I take advantage of that. It's like, right now, weekly is like 250%. That's insanity, right? And so, traditionally, if the implied volatility is high, option seller is usually the best people to win out, right? Now, if you bet up and down, buying option, buying puts, buying call, you're going to have to pay a steep price for this. And so, be careful. Be careful. I'm just telling you. Be careful. But yes, you could make millions, but you might lose a lot as well to do that. My point is you have to pay 10 times as Rowan Kitty paid when it was running, at that time. I'm sure he bought like a $40 strike price for like $4 a contract, right? Now it's probably cost you $40 a contract or even $80 a contract for you to even get that. So my point is you pay more. You have to pay more to bet it up and down like that. Better. I'm getting sidetracked here, you guys. Sorry. Okay. Top line revenue doesn't matter if your bottom line is going up, yes, or profitable. Consistent year-over-year profitability is the biggest key. Yes, exactly. Thank you. Jay, we know we'll win for sure. Of course, I know that, and that's why I'm so lucky to even find out about GameStop. Even though I've been buying since 60, 40, 30. Again, consistently adding more. This is for my, again, long-term bag here. And my point is that I'm kind of hybrid in that way. Warren Buffett usually is my go-to. He's famously saying hey, I don't know where the price go. I just know if you have a valuable company, you would want to own it for at least decades on end. Like if you are not willing to hold a share or a company for 10 years or more, then you have no business in owning the company, right? And if you think that the company is valuable at a higher price than it is today, why not add more, right? You should be happy buying more at a cheaper price. People are gonna, speculate on the price action, short-term price action, because it's fun for them, right? So they get to make, I don't know, hundreds of thousands of dollars on call option. That's why they are promoting call option rather than buying shares of the company that you could hold forever technically without any fear of losing to time, right? And option traders, yes, you could make a lot, but you could also lose a lot if you're wrong. And it's time sensitive. So to eliminate that, you just buy shares. Now, buying shares of the company also could be dangerous as well if you buy it at the wrong time, right? And so that's why it's good to kind of do a little bit of assessment whether $60 is a overpriced or undervalue, right? There are some people who want you to believe that this company is going to be $5. Okay? Now, if you understand the balance sheet, you would tell yourself, or at least you would find out, that book value alone, it's $4.30 whatever cents right here. 38 cents. 39 cents. Oh, okay. Even more valuable. Okay. So with that statement alone, people are telling you that, book value is $4. Let's just say $4 just to kind of, be a conservative. And if they're telling you it's $5 price target, that means you could buy the leadership, you could buy the company, the brand, whatever, at $1 a share. Okay. If that's what they want you to buy the company at, you would be stupid not to buy it at that price, right? So again, and this is where the conviction I got from to buy it at $10, to buy at 11, 13. When the price come down a couple weeks ago after earnings, I was like, this is crazy. And of course, if you don't know the balance sheet, you would have sold. You would have sold here, listening to people. Oh, it's going to go to single digit. Manual here, telling people. It's like, oh, it would be wise to buy it at single digit. Well, it hasn't been like you missed out, right? Now, I'm not saying it's never gonna come back down. I'm not saying that at all because I can't predict this volume. Like this volume, it seems seemingly out of nowhere for me, right? And this is why I do dollar cost averaging down. I mean, come on. So again, for those of you who are new here, new to this company, I just want to, caution you to at least look at the fundamental. I've been accumulating, of course. I'm biased in that sense. Just take that as it comes. But man, this is the opportunity, and I see it clear as day. And I hope that people are at least be a little bit level-headed. Just be aware too, you have the dynamic of the stock market here. You have option traders, you have day traders who just, straight up buying shares and then sell at a high, whatever, like this guy seems to, always buy at the bottom and then sell at the top, right? If you could do that, you would have been a billionaire by now, and so, everybody has their own strategy. But my point in this particular person, I've talked about him before. Moran's talked about him before. It's the misinformation that, these people are spreading about GameStop. They seems to peg it to AMC all the time. Of course, I'm hoping that these people knows the difference between GME and AMC. Right? I used to be on the same camp where they're both the same and they're all meme stock, fundamental doesn't matter, and all that BS, right? Of course, you have to weed out, the difference between the two. This guy has been telling people to trade. Of course, like if you want to be associated with, then do it. If you make money doing this, then do it. Don't listen to me, right? I just have the experience of being a trader before. Day trading is very stressful for me, and this is why I developed my own strategy of long-term investor. Okay, and so now, with that being said, though, what's misinformation that I hear about? Not this particular video. A couple video ago that he do on GME. Hold on, let me see. I'm just not going to play any voice here. Of course, he has problem with Moran's rants and all. No, this one right here. Let's see. I put my house on GME. What? Of course, like that's a stupid idea, right? Even how I trade the stock or how I track this stock, my conviction in this stock, yes, it's high risk, but in my opinion, it's calculated risk because I follow the company. I understand how this company trade plus how it operates, right? And I love leadership, and this is why I'm so convicted in this stock. Very high risk because I'm just focusing on one stock. So if you put your house on GME or any other stock for that matter, that's even more risky because your livelihood depends on this particular stock. For me, I have a place to stay, like I would never ever sell any possession just to buy GME. It's ridiculous, or AMC for that matter. So now, what is the misinformation here? Of course, if you listen to this one, I'm not going to play it, but he was saying that people should have been buying GME at $400. And I'm thinking, okay, if he's saying $400, then he should have said, then he should have said instead of 17, it should have been 4 times that, right? So if you use $400 as the price for the highest that this company ever gone to, then you have to account for the split as well. So this is the misinformation that these people are trying to tell you. So my point is, if this guy is telling you GME used to run to $400 and then coming back down to close to $70, then it would be more accurate than saying it's 17, because the split, right? Now, if you want to use 17, the current price, as your coming crashing down back to 17, then you must use this one right here, $120. That's the highest GMES ever hit in this price at the current state. So that's the misinformation. There's a difference between 400, because 400 never happened, right, in this context. So it's out of context, made people, who don't know anything about the company, trying to get in, for whatever reason. Perhaps they like the company based on the fundamental. They've been following fundamental of the company and didn't know anything about the squeeze, right? Just, fresh eyes type thing. When you hear people like this describing from $400 to 17, it seems like it's a steeper price to stomach. And this is the misinformation that I'm trying to at least get people to realize. And sometimes, again, if you're bearish on this company, you're going to say stuff like that and compare this company to AMC as well. And so that's the difference. And this difference could mean thousands of dollars that you're missing out on a good company here to own at this price point. Yeah, that's just my thought. And I think people need to know about this company based on the fundamental level here. Yeah, I think I'm rambling on, you guys. Michael Patcher is way off. What Bush is the wrong side? Is in the wrong side of history. Yeah, I mean, the reason why I was looking at this subject, or try to look at this subjectively as much as possible, is let me rephrase that. The reason why I try to learn to do the analysis myself is because nobody gave me an honest analysis on this. Only one, really. Just one analyst. I mean, it's a free country. It's such a press. And then, to me, this is why I think there's something here that is hidden that I, was not supposed to know, quote unquote. And so that gave rise to me to wanting to look into the company based on this. Like, why are they trying to lie to me about this company, right? Or at least, like, misinformation everywhere, undermining every single thing that this company has been doing or this leadership has been doing, telling you certain things. So it's always a good exercise to do for yourself. Just look at the facts for yourself and then come up with your own conclusion. Don't rely on these news. Don't rely on these analysts to tell you otherwise, right? Don't rely on me. Like, of course, I have my own bias here too. So be cautious. Just be aware. Learn how to invest better. And the way that I know how to invest better is to understand every angle, and this is why I learn option. This is why I learn how to trade. This is why I learn how to look into the company based on the circumstances, the actual, grounded in reality too. Don't just go to the moon and all that stuff too. Of course, it's exciting to talk about that, GME going to the moon type thing, because of the background story of the company, right? And we all know what happened to this company. Everyone who been here since the beginning of the removal of the buy button know what's going on in this company. And so there are people who still think that the short hasn't covered, or short already been closed, it's done, it's over with, and all that stuff. Or the other side of things, that the short never closed, which I'm kind of like leaning towards. And we'll see who will win in the end. Based on my knowledge on short, if you want to short the company, the only way that you could do it is to borrow shares. And so short has a ticking time bomb type thing. They're in a losing battle due to time. So if you could outlast them, long, meaning just buy shares, don't buy call options or whatever, and hoping, because again, time sensitive. If you buy call option, go leap, right? But even then, you still have to pay a hefty price for that opportunity, quote unquote, to earn, 10x or whatever. But again, this is opportunity. Doesn't mean that it's for sure. Like if you're wrong, you might be losing a whole bunch. So again, make sure you know what you're doing if you buy a call and all that stuff. That's just all the knowledge. You need to learn all of that to understand why this stock price surge. Why is it, all of it plays into this crazy price action here, right? So within, 2 weeks? Okay, from the lowest to now. 3 weeks. Within 3 weeks, we were at 10. Now it's at, the highest was 2020. That's insanity, right? And again, the stock could gap down again. Can they keep it down? I don't know. I mean, with all of this volume, if the volume keep coming in, keep going, up and up and up and up like that, I don't know if they could contain it because of the call option, because of the, gamma ram, so to speak. I don't know. Again, I'm using that term loosely because it's been used before to hype, people buying shares at a very high price and, and so just be careful. Don't be overzealous the other way too for the bull. I've fell into this before, so that's why again, I'm just focusing on the fundamental of the company. This is where you are. And if the news tell you there's nothing to do, there's no fundamental reason, and there's some fundamental reason, are they trying to mislead people again? Really? There's no fundamental reason? What are you talking about? How are you telling me there's no fundamental reason when this is happening right here? Right? Come on. What is going on? And if you start to question those type of narrative, then you're going to win out. You're going to be able to pick a gem among the rubbish that they're throwing at you. What is this? Highly ranked manager who bet on Mag 7 giant look to second order. Okay, so they're AI based again, right? AI is a big game changer for the economy, right? They're just throwing AI. Chipotle, Starbucks, remember they just posted earnings and it was like a drop 15% down, right? Nobody say, oh, this is a shitty company, look at the price coming down 17% down. Nobody. And again, the prospect of Starbucks is pretty grims. Let me see. What is Starbucks? I don't know if anyone follows Starbucks. I just remember seeing the price drop right here, right? After earnings, right? Nobody say, oh my God, terrible company to own. Oh my God, the economy. Of course, this is due to consumer getting crushed, right? Nobody wants to pay $7 for a latte, okay? You could learn to make your own coffee here. But yeah, they've been overpriced for a long time, but people don't see this. Okay, so let's look at the OBV. Now, OBV hasn't been come crashing down. So OBV is still high for this one. Lumen. Let me see. Okay, still two. This is a daily. Okay, so daily. Okay, so this is the look at. Okay, let me try to show this. Just my whole point. Maybe I'm wrong here. Different time frame. If you're knowledgeable about this, please write in the comment down below. Or whenever. You see, like whenever you see this gap down, you should be seeing the price, OBV going down as well, right? So let me try to look at that same indicator for GameStop when it gaps down. Back in the earnings time. Okay, so this is the daily. Okay, there's some there, some steep price action here. Okay, gap down. Okay, people did sell a little bit. Okay, but then people buying here. Is that a good indication? I don't know. Now it's kind of follow there, right? But again, it ticks down ever so slightly. It's still at 5.92 versus 5.96 right there. So the share just fluctuate in that sense. But currently, right here, this has people. People probably were selling more so up here. Yeah, who knows? Again, people are just, quote unquote, sick and tired of owning their shares. There are people like that, yes. Perhaps that backholder, that terms that they use all the time for people who are, keep buying this particular company. It's getting to people. This is psychological, right? And so be aware of that too. And again, price action is elicit people that emotions like, oh, okay, at least I'm gonna break even here or whatever, right? So who knows? There's all sorts of market participants out there, so be aware of that as well. Yeah, but again, this is why you have your own conviction. This is why you build your own thesis and go run with it. And to me, this is a valuable company to own. Period. Jimmy is the only squeeze place still standing, the chosen one. Of course, yes, but I'm sure they're gonna throw at you other play as well. Oh, this is a sympathy play. I already heard that words, coming from a lot of people already. Oh, GameStop's gonna run, therefore this gonna run. Carvana run, this is why the GameStop runs along with it. It's like, I think I just watched a Urban Finance episode. Benzinga, somebody from Benzinga was on there, and he was saying that. It's like, oh, there's no fundamental behind it. It's like the company is actually losing money and all that stuff. What? You're Benzinga and you're supposedly, following the stock and all that stuff. But that's the narrative that people are, perhaps they believe it themselves. That's why they spreading that information, thinking that they're right. And they have not verified, right? And I think Dave, the main guy there, he was saying no, it's actually profitable for the first time and all that stuff. So there are people who haven't been following it. They just listening to the headlines, right? There are people like that who exist as well, and this is when they miss out on the good company to own for a long time. So, and yes, I'm sure there's new people coming in all the time who are not aware of what's going on in this particular company in the fundamental sense. And again, this is why they write articles like this. even though it's not grounded in reality whatsoever. They want you to believe that, right? Okay, more for cheaper, averaging down for those who originally bought in higher is definitely key. In my honest opinion, of course, poor patcher. I don't know what this stands for. In my I don't know what that. Jimmy is literally inedible. Yeah, of course. I mean, again, like, there's so many people betting against it. Oh, actually, this point right here. Let me, see. Did I was watching something earlier. Maybe, right here. So he was talking about GameStop. Let's listen to a snippet of it. So this is the point where they were talking about GameStop.
And obviously that was pre-split. It's when you look at your chart, you can see those levels. Yeah. I mean, that started with retail, but that completely turned into algorithmic trading that drove that. That wasn't, grandma, with her 200 shares buying it up at $350. That was 90% out. Like you remember watching it those days. It was all algorithms. It was all algorithms.
It was nuts.
Momentum ignition, whatever you want to call it. But it went crazy.
It was momentum ignition, but it was a gamma squeeze as well.
All of it combined, perfect storm. Yeah. And retail benefited tremendously. Anybody who sold obviously benefited tremendously from that. But I mean, that's where we're at. Is like these stories start, in social media or something sexy. Oh, that's a good trading idea. And then it just kind of goes from there. It's why something like Carvana naturally gets everybody thinking about GME again. And then you just get a kickstart with a few retail traders coming in more and more. And then the algos grab it and boom, you have a 30% pop in GME in a day. And everybody's like, what the hell happened? It happened with it happened because of Carvana.
They think it happens because of Carvana, right? Of course, the private equity angle, they don't know anything about that. Of course, these are traders. People, they trade in and out, and they don't care about fundamental. They don't care about what's happening in the company. Why Carvana, of all companies that are losing money? I mean, if you look at the fundamental, obviously, and this is why, again, they try to mislead people that GameStop doesn't have any fundamental whatsoever. So you got to learn, to weed out what is true and what isn't. Carvana. Revenue, all of that, and we went through the stats. Net cash position, highly in debt. Who knows, right? Capital expenditure. Somehow they're still, pulling in 5% profit margin. But let's look at the expenses real quick. Operating expenses. Look at that. Interest expenses. You have to pay that much right there. So just interest alone, $600 million. Crazy. Right. So it pops, but look, revenue's down 11%. Oh, growth. Sorry, growth. What's happening? Sorry. My phone went off. Okay. But anyway, so Carvana, obviously we know this is private equity, right? From rents. They always like trying to get these company associated with GameStop for a reason. So that people are more likely to be like, oh yeah, there's nothing fundamental about this company. Okay, let's listen in.
That's why it happened. Now, does it continue? Do we go on this major run? Probably not, because it's difficult for these stocks to continue because there's just so many bag holders in them now. But, they do have these little, pockets of, where you can trade these things from, from a short squeeze perspective or just from a day trading perspective. But there's definitely some, movement here where, some of these stocks, they just get left for dead. But, there's something like GME, it's still even impressive, just to finish off the tangent, that, GME is still where it is today. I mean, if you do on the post split, this all started with Roaring Kitty and the stock was basically $1. It's still $15. It's still up significantly from where it was.
It's
a
up
company
a ton,
that's
yeah.
burned a lot of cash.
It has turned around, right? I mean, if you look at it, they were like losing $300 million one year. They're profitable now. I mean, it's a good story.
Retail turned that story around, though. Without retail,
saved the company. Turned it around.
Retail saved that company, which is unbelievable.
Yes,
you would never.
And there are some interesting structural things besides, shorting and derivatives. But even when you look at some of the structural issues, like the time frame out of large flourishes of activity, and I think like the T+35 date was where it kicked off. I mean, I don't know. I don't know if all of these structural issues are also playing into it, right?
Yeah, I mean, I think the very interesting thing about what we saw there, and something that I heard, and I don't want to be that specific on a broadcast, is that...
So this point is very important, and I think this is what's happening right now with Jimmy.
There were some big institutions that were buying up a lot of shares, loaning them out, and then calling those to really accelerate both short squeezes.
Wow.
Yeah, like I know one.
Interesting.
I know one institution on GameStop that I'm told made like $1 billion on just the loans, like the loan payments. So I think anytime
and the utilization has been pegged. Right, if you look at the short interest metrics and the stock loan market on GameStop, it has been pegged at 100% or not at the high 90% utilization for a while now.
Yeah, I mean, but I think the key thing there, and like why I always say it's just like, look, if you make money on these and you're very good at these meme stock momentum trades, like all the power to you. Mm-hmm. But like a lot of people, especially now, are not making money on them. And I just think like even sharing facts like that is like super important, because it's just like, I think at the end of the day, the problem is retail doesn't have control of these trades, especially like when institutions start to get in, controlling things by buying up shares, loaning them out, a lot of the times just like controlling when they get like released in the wild to be short again. And, when a lot of these institutions are like loading up on put options, just getting ready to make a bunch of money on it. Like, I think that's a dichotomy. And like, I would love to see more, retail investors banding together on stocks like Nvidia and sharing a thesis on that instead of like these where they do have control. Like, I think that's the dichotomy.
What? Now, I didn't listen to this part. It was like, what? You want retail to buy into Nvidia? Come on. Now, he lost me until that. But anyway, the information that he put in, or the thing that I just tell you about there, is important to understand. Is that, there's a lot of institutions like Vanguard, BlackRock, and, all of that, Fidelity, they buy up those shares in order to lend it out. Now, lending it out straight up, there's different ways to do it. Obviously, you have put options and, you buy puts or sell cash secure put. Those are also lending it out, but you need cash to do that, right? But institutions, they don't need to. If they borrow a share, they could just borrow it straight up from another institution. So that's another dynamic that you have to understand as well. This is why I choose to sell cash secure put at this moment in time, because that has a lot of high premium, and I don't mind owning GME at a cheaper price than it is traded today. See what I mean? And so so the premium right now, if you write a cash secure put on a strike price of $15, you would receive $100 just for a week. So that means you receive a premium of $100, and if GME kind of come down really steep because people sell or whatever, you have the opportunity to not only collect that premium, yes, you would get exercise, but at least you get to buy, or break even point would be 14 something, right? Depends on what that premium is. And so again, to me, that's a win-win situation. And that's why I was talking about the wheel strategy too, is that this is the best time to do that strategy if you wanted to kind of search. I mean, you could search online the wheel strategy and you will understand how to do that. It's so many strategy out there for you to make money here. But what is tried and true for me is the long-term one. And that's why I'm, kind of focused on that as well. More so than, all of this. Again, this is a temporarily price action that could go crazy based on the storyline that he was telling you, the institution buying in. Now, as time goes on, though, fundamental will play out in this company, right? Fundamental will kickstart GameStop to the new highs, And again, this is a very long-term point of view here that I'm taking based on, just like he's saying, like eventually institution's going to be forced to buy this because it's profitable. Forced to buy this because Ryan Cohen is able to deliver on the net income. Imagine if we post net income after net income, right? To the tune of hundreds of millions of dollars. Now, if you look at the difference between 300, right? I think, right here. So this is why he was saying $300 million loss last year. Now it's positive. So if that trend keep going up, perhaps we're going to be able to do $200 million next quarter, hopefully, right? That would be insane. Insane. But it's remained to be seen. All right, so hopefully, again, maybe $100 million is not a, let's see, hold on. If GME was able to do at least $15 million, then they're going to pose a trailing 12 of $70 million. So close to 100. Why do I think that? Well, if you look at the quarter here, and it's not a thinking thing, again, based on the trend right here. So trailing 12 is like accounting for 4 quarters, okay? So this is how I know. Like if, let's say they are able to be profitable for the first quarter, because first quarter was $50 million right there, right? So if we're able to not lose $50 million, anything less than this would be great, right? We would be able to post, Now, if we could break even, that would be immensely, right? Why do I have reason to believe that they could break even, right? Because, last 2 quarters here, like quarter 2, quarter 3 of last year, we were barely losing any money. And so now, first quarter, of course, is the worst quarter. Hopefully we're not going to do that. If we break even, this would be, close to $50 million in the trailing 12 here, right? Now, if we could do $10 million in the plus for next quarter, then this would be, 10x. So that's how trailing 12 works. And that's why people are like, when people are telling you, it's like, oh, GME's going to have to wait another 12 months in order to make $6 million. They don't understand what it's like GME don't make, that's not how it's being reported. So next quarter, they're going to inevitably shows a much higher, trailing 12 here. But again, depends on what first quarter is. If we lose another $50 million in the first quarter, then this would show 10 million, right? So yeah, but it all depends on what the first quarter could do. So I'm excited. Hey, what is the next one? Next earning would be sometime at the end of June, right? Oh, the 5th of June, sorry. 5th of June, tentatively. It's still an estimate right now, so it hasn't been official yet. And that's going to be a shareholder. Oh, I was able to vote on the proxy, so pretty proud of that. So we'll see how it goes. But anyway, let's finish up what he's saying here. Yeah, I was shocked that he was like, if they ban into NVIDIA?
Them out, a lot of the times just like controlling when they get like released in the wild to be short again, and when a lot of these institutions are like loading up on put options, just getting ready to make a bunch of money on it. Like, I think that's a dichotomy, and like I would love to see more retail investors banding together on stocks like NVIDIA and sharing a thesis on that, instead of like these where they do have control. Like, I think that's the dichotomy now, where we're talking about the opportunity of retail leading these charges based on value, where they have total control in the end of the day, because there's floors on these. It's not like a GameStop or an AMC when they shoot up and then the institutions are going to basically decide when there's, value again, because there's no real way to determine like what a fair value of a stock is when a huge part of that value is social sentiment, where there is some value to, but it's a very hard value to assess and agree on.
Wait a minute. How do you not know the value? The value based on here. Based on what the company is able to generate. Okay, so yes, you could find real value here. And that's why, again, you don't assess value based on price action. You don't. Price action, again, there's so many dynamics out there. Option chain, people are trading in and out of this stock, people are betting up, people are buying shares in order to borrow, all of that dynamic, but that's why you don't focus on the price action. You focus on the fundamental of the company, and at what price are you willing to keep buying, right? And that's why I have my own my own strategy on this. Anything above 22, I'm going to slow the rate of my buying. And anything above 50, right here, I am going to stop buying for a bit. Not saying stop buying forevermore. I'm just saying this is the price range in which I kind of like assess. Now, if GameStop is able to, beat all of these earnings again, of course I'm going to increase this stop buying type of thing, right? Instead of 50. But currently, at current price action, or at current balance sheets, I'm willing to buy at $50. Okay? That's just my own assessment here. There's no rhyme or reason for this at all. It's just like 10 times its book value is a pretty steep for me to even take an account for that, right? Right now book value is what is it, 430, 439 or 438. So that's my logic there. 10 times book value is a good amount to slow down the buying. And if it's, again, if GME is able to increase book value, whoa, what's happening over there? PP. What is this? This is a... Okay. Alright. Crazy. But anyway, so that's just my logic there. And why 22? Because Brian Cohen bought in at 22. This is my own logic here. What's happening over here? Is somebody... Should I block this guy? Remove. Report. Hide this channel. I don't even know what's going on here. Okay, so yeah, I don't have much there. I know, Michael does. Nvidia vomit. I know, right? Like the fact that this guy mentioned Nvidia too. It's just like really.
That's the thing that I like. That I would love to see. You know, a lot more people kind of sharing theses on you know these high growth tech names instead of these ones where like I feel like on the high growth tech names we're talking about like more control for retail. And then I feel like on the meme stocks, that's kind of just like throwing away that control and handing it back to institutions.
Well, let me tell you, I think a great place to have a conversation and information sharing like that is on Urban Finance's new verified shareholder communities. I encourage everyone to check it out. We launched publicly last week.
Yeah, he's just gonna. But yeah, so he's saying that Nvidia has more control. Retail has more control over Nvidia. But look at the institution ownership for Nvidia. Say what? And again, it's like this type of assessment. I don't know where he got the idea from. Retail own GME. Of course, we're gonna have control if we hold the stock, right? But I don't know this guy. Go Jimmy, go to the moon. I know. Now I don't know what this guy is doing here. I guess that's a cue for me to go. But yeah, thank you so much, you guys, for gonna join in. I appreciate you. You know, whoever you are. But yeah, why are you doing these things? You know, like bots or something? I don't know. But let's go. I will be back tomorrow. I know I'm kind of all over the place here. I haven't been, you know, doing any video lately. So I just want to come on here and checking on the price and, you know, what the sentiment is like. What is this? Have a good weekend. Thank you, Michael. Appreciate you. Trash. What is this? Later, baby. Alright, you guys, I will see you when I see you. And yes, just be careful. You know, if you're trading this in and out, be careful. There's some good things happening here with the volume being picked up. There's option-based run here, perhaps, right? All hinge on the fact that they might be exercising. These people have to exercise in order for a market maker to go out there and hunt for those shares. So you might see some crazy things happening in this particular run. So yes, exercise some caution. Okay? Alright, I'll see you. Bye.